No sausage.
Hello? All right.
Yeah, I hear you.
All right, we're live.
No sausage. Yeah, go ahead.
Cool. So Chris is making dinner on his side, but he agreed to come on the show. We're here with Chris,
Hey,
Sell
what's
the
up?
Fucking Rip Trader. What's up? And down below in the description, I've got links to some stuff. There's a link to a video about rolling options. Rolling is something that we talk about on here some. And so if after the show you want to learn more about that, there's a video there if you're not familiar with rolling options. Also, there's a Spotify playlist. So I recommend putting that list on while you're doing your trading homework or while you're listening to this show. Just get your audio levels right. I can't play it for you on the show, or I would. Maybe I'll look into if there's a way to do that. Anyway, also today I've got Sierra Nevada Big Little Things IPA. It's pretty good. I got the whole box from Costco. It's like a variety pack from Sierra Nevada. This is their Imperial IPA. It's a 9%, so pretty good. I got a couple of them here to enjoy tonight while we do the show. I forgot to tweet out that we're going live with this, but maybe I'll tweet that we're live here in a second. So there's a lot to talk about. A lot. Viacom, Tencent Media, a lot of these Chinese internet type of stocks got hammered last week. And so there's probably some opportunity there, probably on the long side. I think maybe even Baidu was a part of that. So that's something that I did want to talk about. Also, some sectors are looking strong and others are looking pretty weak. And so the markets are forking. There's a lot of ideas that are working right now and other ideas are not. So it really just depends where you're looking. So this is a stock picker's market. And it's actually a pretty tough market, I think. It has been for me. All right. Let me send out a tweet real quick just to let people know that we're live.
Yeah, go ahead.
Yeah, just 1 second. All right. Chris, you want to call out what's on your radar right now?
Yeah, I've been thinking about Evergrande or whatever that boat is.
Oh, yeah, we got to talk about that.
I'm pretty. I mean, here's my play: long crude and short everything that uses crude. So, let me just go ahead and do my CCL now. Then.
Okay.
So, I'm not looking at the chart right at this moment. So, John, if you could pull that up.
Yep, I will.
Caribbean Cruise lines is it has run up, not tremendously, but it's run up. And looking at it, it's like this elongated bear flag that has not been able to break through certain key levels. And with the Suez Canal being jammed up, I don't think oil trade is going to be doing all that well. So we could actually get a shortage in crude if they don't get that, or not us per se, but globally, there could be a shortage in crude because of this canal. So that said, I am looking for inflated prices on crude, and I'm looking for trouble in companies that use crude, airlines, cruise lines. Fuel prices will go up for those of you that trade gas futures, which is RVOB. So,
yeah, let me bring up the Jets ETF also. I brought up that chart, and that's at resistance right now. Actually, it's at like a really powerful resistance level on a weekly chart. So maybe we can zoom in and look at levels on that. Jets ETF.
I don't know what that is.
Jets.
Did you say Jets?
It's Jets. JETS. It's the ETF that has a bunch of the airlines in it. Now, I don't know that Jets is what I would use. It has a lot of volume. I don't know how the options are on it. But, I mean, the volume last week was 43 million, but only $26 a share. So
Okay.
there may be better ways of doing it, like going in
I would
and
just go long XLE.
XLE.
Go long XLE. Yeah.
Okay, I'm looking at XLE. That's kind of at a resistance level, too, on a weekly chart. If we zoom in, I mean,
Now, mind you, I'm not looking at the charts. I'm just going off
yeah.
of, pure fundamentals here of what's going on around us.
Yeah, so a few things about that boat. Like, one thing I'm not hearing anyone talk about with that boat is it's full of goods and commodities that are bound to hit store shelves and things
Right.
like that. And if you think about the timing of it, this is kind of right before or just as people are getting stimulus checks. And so I think the idea here is, let the prices run up on stuff and then get this, get these goods on the shelves. And so there's kind of an ulterior motive there for people with goods on the boat. So I don't know if that plays into it or not, but there's certainly a dynamic there. Like when inflation happens, a lot of times it's not just the customers sweeping the store shelves clean. It's also the store owners because they don't want to get their stuff bought at lower prices, and then the price goes up for everything, and they don't have stuff anymore.
Right.
So I think that's kind of a factor here with the boat. Like at least it's a fortunate circumstance for some people who have those goods coming to load onto their store shelves. It's like better if they do it later in an inflationary environment.
Right. So I'm looking at XLE and
yeah, you want me to flip to your screen now?
No, you could just stay on yours.
Okay.
So I'm looking at XLE now, and
what time frame? I have the daily chart up.
Yeah, that's what I got. I'm looking at the gap up, and it looks pretty strong because it's got a wick at the bottom, not the top.
Right.
So it closed at its highs. So I'm liking that. And on the accumulation distribution, it started its distribution phase on Friday. So that looks good. So that works well for the that whatever boat it is.
Yeah. So I think Evergreen is the company and Ever Given is the boat. That's my understanding.
Okay. All right. So what's the other thing that we could tie that into that uses fuel? Airlines. So let's look at some airlines. Delta,
DAL. I think. Yeah.
Whoops.
Okay, it looks similar to the XLE chart.
It does. It does. And Love.
Yeah, so I have some long-term calls in Love and CCL, and CCL's really kind of petered out, and Love has not. So, I mean, I don't know if I'm going to stick with it on the CCL or not. I mean, they're very long dated.
CCL don't look good to me at all.
Yeah, it was looking good until, like you said, the boat thing happened, and it's been dropping since.
Right. So that's the first thing I'm shorting on the belt.
Yeah.
That's the first thing I'm going to short on the belt. And,
yeah, it looks like it's kind of at a spot here where it could go down to the 50-day moving average is 24. It could easily get there because it just bounced off of it. It could go right back there easily.
Let me pull up a different. Whoops.
So you just caught a bounce on the 50-day moving average at around $24 a share.
Right.
So, I mean, that's maybe a short-term target.
I'm looking at the weekly. Hold on.
Yeah, so what's your time frame here on this? Are you looking at, like, in and out in a day, or is this like a week-long thing?
Hang on 1 second. I'm going to throw a fib on it.
Okay. All right, I've switched over to your screen now, Chris.
Okay.
Yeah, let me
Time
just make this
frame.
bigger.
Oh, you got time. You got time to futz with this thing. I would do next week easily, and at the money or in the money. Hold on, man. If we do that to there, no, that's not lining up.
Yeah, so like at the money puts with maybe one week time.
May to June is what I'm seeing now. That could be a higher low thing, and we could just get a short dated pullback until the thing gets unstuck. So I would say not this week because we got Good Friday, but next week I would do an at the money.
So you're saying at the bell, you're looking at 2 week duration on
2 week, yeah,
on the calendar.
2 week duration at the bell, open puts,
Yeah.
no protection, because it's either going to drop or it's not.
Yeah. So if it's not working right away, you just punch out.
Right.
Yeah.
And don't, if it's just, going sideways, let it go sideways until it picks a direction. And if it picks your direction, fine, stay in it. If it doesn't pick your direction, bail.
Yeah, so like the opening range breakout kind of a thing. So you'll be watching for, like, if it starts working right away, you might jump in. But if it's kind of forming a range, you might wait for that range to break lower.
Right.
Okay.
Absolutely, and that's my number one play Monday morning or tomorrow morning.
Got you. Yeah, and are you planning to live stream that?
Yeah, if I get up in time. I've been feeling a little under the weather. The whole house has been feeling sick again, and I'm hoping that this ain't going to be round 2 COVID.
Yeah, I watched some of your stuff. You're very patient during the day. I mean, I'm not watching it real time, but I think you posted like on YouTube or a recording or something.
Yeah, I posted one. I am very patient, and it's required.
Yeah, and I'm trying to get better at that. Like, it's as traders, we have to constantly be attacking our weaknesses, and patience is sometimes a strength for me, but a lot of times not. I was watching an interview with this guy, Mark Cook. He was interviewed by Jack Schwager in Market Wizards. I think it was Stock Market Wizards. But anyway, he talks about 2 different types of personalities that traders have. He calls them innies and outies. And if you're an outie, you tend to be on the sidelines and doing research and diligence and gathering facts and combing through data and carefully selecting your moves, more like a sniper. And then the innies are people that are they're more impulsive and they tend to be jumping into things a lot. And he says both of these types of traders can make money, but it's important for you to recognize which one you are so that you can you can be aware, have that self-awareness and not let it turn into a harmful thing in your trading. And so for me, I'm an innie, and so I'm trying to like be more choosy and be more selective and let the opportunities come to me. I'm trying to get better at that part of it. It's hard. I mean, I've been doing this a long time, and it's always hard.
I think the reason I have to have patience is because I don't use very short-term timed charts, because they produce more false breakouts and breakdowns than anything.
Yeah, they do. They do. In fact, I want to look at a trade. I did not take this exact trade last week, but I want to look at a trade setup. And this is something that I have talked about this setup before on the show. And I think it's a really good one. It kind of reminds me of, that guy Trade with Ninja. I don't know if you ever look at any of his stuff, but it's kind of similar to the kind of play that he might do. And so what it is I talk about these 1-inch punch trades, and he calls them lottos. And when the market gets really oversold on a short-term chart, I just want to show everyone what that can look like, because I was in there looking at this. So what I just put up on the screen, and Chris, you're probably not watching, so I'll just describe it for you. As I'm looking at the 392 call for SPY.
Just tell me the chart.
And let me bring up SPY.
SPY, okay.
Oops, not XPY. SPY. And let me jump into, I'll do a 15 minute, but you could do a 10 minute. And you see the RSI gets like super oversold. It's showing like super oversold on Thursday of last week, March 25th. And so this was really a major low in the market. And, you know, we'll talk more about this and what it means for other stocks later, like Tesla.
Okay.
But anyway, like if you come in here, and one thing you could do is when it gets into an oversold state like this, you can start slowly buying, just accumulating slowly contracts that are essentially been discarded as worthless, that are calls. And
right.
So if you go like 1 week out or just a few days out, what I'm going to show now is what I have on the screen is the March 29th expiration call, which is I think Monday. Yeah, it's Monday. So this would have been, you would have been buying, I think, 5 days time on this. But if you look at the low on this contract, you know, that whole morning.
What strike are you looking at?
I'm looking at the 392 call for March 29th expiration for SPY.
Okay.
And I brought the chart of it up. And so, like all morning long, while the market was showing that oversold reading, let me see if I can get these both on the screen at the same time.
I'm in a SPY short for Monday. Let me see what strike I picked.
Well, this isn't a short. This is a call. I'm looking at the call. From Thursday. What I'm talking about is like if you look at the RSI on the 15 minute, and when it gets
right.
or 10 minute, right, when it gets super oversold, this is just a standard 14 period RSI. When it gets into these red zone readings, like 20, 30, 30 or less,
right.
You see these kind of opportunities here where you could have been buying this contract for like 30 to 50 cents each, and as the price goes lower, you can buy cheaper and cheaper stuff, lower strikes. But the point is, and I know there's this monster rally at the end of Friday that doesn't always normally happen, but the point is, like, this thing is up over 10x. And this is the kind of trades that, like, I've been looking at and studying what that guy Trade with Ninja does, because there is an overlap with what I do. Although I think he's refined that kind of thing much more than I have. So anyway, this is something that I talked about recently on a show, and this is just an example of one of those setups and how it played out. So it doesn't take much money. You don't put very much in, but it can turn into a lot. I mean, anytime, any opportunity you're looking at where it can make 10x on your money, like that's a lot. But again, being choosy and not just being if you're already in a whole bunch of positions and you're getting hammered, you're getting your face ripped off when this RSI is reading like 30 or below. And so if you already got the boat loaded long, you're probably not in the right kind of spot. You're probably like stopping out on stuff, getting shaken out on things. But if you're more patient, you're one of those outies and you're watching from the sidelines, this is the kind of opportunity you can take advantage of. And so anyway, I'm trying to do shift more and more towards this. So although this is a more shorter term trading style than I normally do, I mean, I can't ignore this kind of stuff. It's just it's too there's too much potential here. Right.
I understand. So as an example, playing off of what you said, I bought 2 contracts of the 395 strike for
I'm looking at your screen now. That's what I got up. So yeah, talk us through it.
In a different broker, I bought the 395 strike, which is
Yeah, it's like
here.
right around there. I mean, that breakout at the end of the day, you have after hours showing also on this, which is why there's that like ridiculous wick.
Yeah.
Yeah, and so like at the very end of the day, it closed like right at like 396 or whatever, that huge up candle. That's all the way into the close. So I'm just clarifying for people what's on your screen. But yeah, go ahead. So this is an intraday chart for SPY.
That wick was at 8:15. That might be why I got filled. So, yeah, I got filled. Wait a minute.
Well, no, that wick is after hours. That's just garbage.
I was trading it at 6:10 or 6:15, somewhere around there. I was trading it right in.
Oh, in after hours.
Yeah, I was trading it in after hours.
So you're actually trading like SPY shares.
No, you could trade options.
Oh, the options on SPY run longer, don't they? You're right.
15 minutes. So somewhere around 14:05 or, I mean 16:05 or 16:10, I bought 2 puts, and I have the 395 strike. The reason that I did that was because of that stupid, ridiculous run up we had into the close.
Mm-hmm.
And that's the only reason why I did it. There was no other reasoning behind it other than that was an
yeah. Well, because it's now it's an overbought situation, right?
Yeah, I mean, it was an algo ran wild.
Yeah, well, there's a lot going on. There's a firm that got liquidated last week. I only came to learn of it over the weekend, actually. So, they had, that firm had a bunch of Chinese media stocks and also like U.S. media stocks too. So they had Viacom, they had Discovery Channel was a big one, and a lot of these stocks were up a lot. I mean, they were on some huge runs, and then they got rug pulled. So let's look at Viacom real quick. I mean, unless you want, if you're not done talking about SPY, I don't mean to move away from it.
Well, that's why I did what I did, and I waited all day long for that trade.
Yeah, that's patience.
And it came at the end.
Yeah. So these are at the money puts you got?
I'm sorry, what?
You got at the money puts?
Yeah. So I'm really glad that I did. Well, no. I got 395s, and it was trading at the close at I got in the money puts, actually. I bought in the money puts. They had to have been, because it was trading at 395.88, and I bought 395. No, at the money puts.
Yeah,
I'm sorry.
At the money. Yeah.
Yeah. So anyway, I'm glad, because I'm looking at the S&P futures, and they're down 17, which means that the SPY will be down $1.70 if it holds where it's at right now.
Yeah, nice. And normally the market moves up overnight, but probably not necessarily on the or through the weekend, but not on the back of a move like that.
Right. Now, if you look on my chart, look at the trend. You see it right here?
Yep.
You see that number?
Yeah.
They were buying puts all day long. Anything above 110 on the trend, they're buying puts. And that's what told me to watch the market and wait for a sell the rip move. And we got it.
You sell the fucking rip. Yeah, you're living up to it here with this one.
Yeah. So, all right, now I'm done.
Okay.
And you want to go to where? What ticker?
Viacom. VIAC. So I was looking at puts on this thing, and I mean, it's unbelievable, the move that some of these put contracts made last week.
Wow.
Yeah. Isn't that wild?
Good grief, Charlie Brown.
Yeah, so this is a fund got liquidated in the middle of a fairly quiet market. So I mean, this has been really confusing, I think, for a lot of people, myself included. Like, just what's going on? Well, hang on, I'm going to read a news headline here in a minute about this.
What this looks like is a margin call.
It is. Exactly. That's exactly what it is.
Oh.
Yeah, you're right. So what I'm going to show here, I'm going to show the 80 put that expires next week. And
Uh-huh.
I'm going to show the chart. I mean, this is what I want to start doing this more often, like clicking into the charts of these things to help people
Okay.
build their intuition about like what's actually how these contracts actually move because it could just be nuts. So
Right.
on March 23rd, this thing is trading at 66 cents. Okay, which means that for $66 plus commission, you can own this put contract. And then here we are at Friday. It's $35.60, which means that if you sell that contract, you're getting $3,560 minus your commission. And so this is the kind of stuff that guy, the Lotto King, Ninja trading with Ninja, that guy, he does this kind of stuff.
Right.
And this is also the idea behind the 1-inch punch. However, the problem is that I talk about on here all the time. The problem is it's really hard to find this stuff while the markets are calm. It's easy to find it afterwards. So let's walk through an example with Tesla, and then we can talk about Tesla some more.
I traded one with AstraZeneca after you do Tesla.
Oh, let's talk about that next, and then I'll flip over to Tesla because what I want to show with Tesla is how like even if you miss the move down, you could catch the move up. So like even something that's underway and on your radar, you could capitalize on it the other way. That's what I wanted to show. But let's look at your example. So I'm gonna flipping over to your screen. Go
Okay.
ahead.
So on my Twitter account, and I don't have it pulled up right now. I don't think I even have it set up on this laptop. I tweeted out that AstraZeneca was being reported at a 73% efficacy rate. And when that report came out, it was very quiet. Nobody kind of paid attention, and it was very short. It was just a one-time, by the way, type thing. And I just happened to be lucky enough to hear it. And I tweeted out, hey, I'm long Walmart, and AstraZeneca is at a 73% efficacy rate. I am buying puts here, which is right here, right
Yeah,
at that
damn.
cross. And then the next day, it did that, and I wrote AZN, boom, literally. Yep. So yeah,
nice.
they sometimes you just get lucky.
So that guy Ninja, he talks about he showed his portfolio one time, and it was all these like all his entries. They were all like 30 cents, 50 cents, whatever. He's like, people say, he said that people say, don't you pay a lot of commission? He's like, I don't care. I don't care. Yeah. Because when he's selling these things, it's they're worth a lot more. So
the cost basis on commission for some of us that do options trading, a lot of it, we're paying like 50 cents a contract.
Yeah.
So it's negligible.
Yeah. Well, I mean, even that adds up, though. At one point, by the way, last year, at one point in August, or it was before August. I think I got these in June. I had like most of the open interest in the in some of the silver way out of the money strikes.
Yeah.
And it took off like crazy. But it didn't happen until August. Like that breakout in silver happened much later. And so I was sitting on this stuff. I had like tons of contracts. And the commission bill on that was so big, I couldn't close it if I wanted to until it took off. It would have cost me more to close it than I would have got for the proceeds.
Right. Yeah. That you just let it go to zero at that point.
Mm-hmm.
But,
I went into it like that. I mean, it was a crazy move. It was so huge.
If you think about it, let's say I don't remember what I paid for these, but let's say I paid 50 cents a contract, right? And I bought 3 contracts, I think it was. So that's $1.50 in commission.
Yeah.
But I made $150.
Yeah. Yeah, not bad. That's not bad.
Now let's scale it up. Now that was 3 contracts. Now let's multiply it by 5. So I would have paid 5 times 50. 5 times 50 is $250 in shares or contracts, and then my commission would have been 5 times 50 is $2.50, but I would have made a shit ton more.
Yeah, and so one of the things that stands out to me about getting really cheap contracts, like what that guy Ninja's doing, and like what I did with that SLV trade I told you about,
right?
And some of these 1-inch punch trades, is it's really hard to price the options properly past some kind of threshold. So think about, like in physics, when you're talking about a black hole that has like an event horizon, and when once things get past that event horizon, physics starts to break down, and there's that point with options contracts too. And I think that's what this guy Ninja's doing. And that's what we do with the 1-inch punch trade. Like I told you about that GME trade I had, where at one point it was up over 100 times what I had paid, like almost 200 times what I had paid. And it's because I only paid 70 cents a contract. And then the market had a big move. It had a big dislocation, and those contracts have been discarded as worthless by the market makers.
The ones that you were profitable on?
Yeah, I paid 70 cents for them, and at one point they were over $12.
Okay.
So I mean that's. It was 70 cents, and then it went up. It went up huge. So
all right, it went up to 12.
So anyway, here's my whole point: is these market makers can get into situations where they can't price the options contracts properly because they're following their formulas.
As long as they follow their formulas, then I'm good, because I look at the delta, I look at the gamma, and I'm betting on gamma squeezes every time I make a trade.
Mm-hmm.
And I'm looking at the IV and I'm looking at the theta. I don't mess with rho. So those are my main ones, is the delta, gamma, and theta.
So one thing that gets me is the Vega. The Vega is what gets me, because those option simulators, they don't actually they don't let you play with Vega and say, well, what if Vega was here, or what? Because it depends on where the price moves or whatever. But I can't just say, let me change the IV and see what that does with Vega. In the simulator, I can't just ratchet that IV up and down. That's not a variable they give me.
Right.
And so it's kind of a blind spot. I feel like I'm driving in a car without a rear view mirror or something, where I can't see what the impact of changes in that IV is going to be, other than just looking at the Vega and guessing about what that's going to do. So
I'll be honest with you, I don't put Vega up because all my options chains have the IV sitting right there. So I just look at the IV.
Yeah, and if you're not doing combos, IV can really screw with combos in a way that, like, if you're not careful with it, it can fool you.
Right.
But if you're just doing straight up calls or puts, it's linear. You look at the IV and it's like, okay, IV. If the IV goes higher, then that helps my outright position.
Right. Absolutely. And that's the beauty of just doing calls and puts, is everything's linear.
Mm-hmm. So I was looking at something. I told you, you and I spoke on a call that was it was outside of the trading homework stream, and we were talking about. So there's a style mismatch between when I'm position trading. You can't jump in and out of those complex combinations. You kind of put them on and let them play out over time. That's the idea. Versus the way that you're trading is you're jumping in and jumping out, and you're doing it with contracts that you've already tailored it so that it's easy to do that and it can make sense. And so one of the things that I was looking at is, okay, is there a middle ground here where some of the things I'm doing might apply to, with the position trades, might apply to what you're doing? And I actually found something. I've been doing homework on this book quite a bit, Options as a Strategic Investment. And there's a chapter in there about volatility and how it affects popular option strategies. And one of the things that is recommended is there can be situations where the IV is really high and you don't want to overpay for the options, and so you're looking at maybe selling some options as a way to make that option cheaper to get.
Right.
And what I found in that book is, I'm going to pull up an example here. Stand by just a second. Let's look at Tesla.
Okay.
And I'm going to look at, let's see here. Was it $622 right now? So, say I wanted to buy some out of the money options, right? And they're looking really expensive. So let's look at something like, how about this? The 650s. Okay, they're out of the money. They're expensive. Let me put this in my little combo builder. Oh no, it's not working right for me. I might have to log out and log back in. Combo builder's not working. Huh.
I don't use that thing.
Yeah. Well, anyway, here's the idea. Basically, is what you could do is, if you're going to buy some out of the money options and you want to shave the price off a little bit, say you're bullish, right, and you're buying calls.
Right.
Well, what you could do is you can sell an out of the money credit spread and use that to shave some money off. And there may be places where this makes sense to do. Okay, it's coming up, but it's not looking right. Let me put this back in. There we go. Nope, it's still not rendering correctly. This is not the correct graph. I hate it when this happens. Let me clear it off. I'll go to another tab. Come back over to Tesla.
Good.
Okay. What were we buying? A 655. And then we're going to sell an out of the money credit spread on the puts. So we're taking a bullish position with puts. And so what this can do, it's still not rendering correctly. But anyway, here's the point. The point is, when it can help protect you if the IV drops. That's the idea.
Right. Because you're selling a put?
Because you're selling a put credit spread. That's actually, it's a bull put spread. And that will actually make you money if the IV drops. And so if you're looking at a situation where you're bullish on the stock, but you think that the IV is going to drop, then instead of just buying the straight up calls, you can also sell the bull put spread. And that will help protect you against drops in IV. Because, I mean, it can just be killer for long options, right? When the IV drops on you.
Yes, it does. But if the IV drops, you just drop out of that position, you take the same position, and you either go long, or you find something that has a bullish bias that you've already researched earlier that day, or that night.
Right. Yeah, what you're saying really is like, just punch out.
Yeah, that's it.
Yeah.
It's just that simple.
Yeah, cool. So Tesla, we got a lot to talk about with Tesla.
All right.
So we made some great calls on this during the drop that happened recently.
Mm-hmm.
I had some positions that benefited a lot from that. And when I look at it now, I'm thinking it's probably going to be range bound. So I don't see it going back down. If we get to another state of fear, like when I look at the RSI on the Tesla daily chart, I mean, you see that for just like months and years, it has, well, I don't know about years, but for months, it hasn't hit the under 30 on the RSI. And when it finally did hit that marked the bottom. So, at least for the short term. My point is, if we get to that state of fear again on Tesla, it's going to be at a much lower price level. So, how we had talked about, this is a market that's kind of forking. There are a lot of things that are working and a lot of things that are not. So like tech, ARK, things like that, they're not working. There's telecom ETF, I think I was looking at. No, maybe that one was okay. Chinese stocks are getting hit right now. I don't know about the whole index. Yeah, like all of the Chinese stocks are down. I'm looking at FXI right now. It's down hard. And the other thing that's down hard is ARK. So those two things, and they're almost an overlap. They're almost a mirror since February.
Mm.
And the fate of Tesla is going to be the fate of ARK. Now, I have a whole bunch of HYG puts, and I've talked about it on Twitter. I've talked about it on this show. And really what I was hoping is that the panic that we saw in ARK in early March and also in Tesla, that you combine that with the TLT blowout, that would be enough. Like TLT's been down a lot for a long time. That would be enough to tip over and cause a panic in the high yield market, HYG. That has not happened. So I'm bringing up HYG right now, and it's almost 87. So, and I think I know the reason. Like if you look at XLI right now, it's strong. It's really strong. There's a lot of strong sectors that are keeping the market up. XLP, I'm looking at my notes here. So XLP, super strong. XLV, healthcare, also breaking out, looking strong. IYR, it's at new highs, breaking out, looking strong. Let's look at the home builders, ITB, also looking strong. So I'm not seeing the cross-asset correlation that you would expect in a panic. So I think the market is just smooth sailing for the most part. Now, there are going to be these crazy moves. Like we looked at Viacom earlier. There's Discovery is DISCA. Also down huge. Check this out. Down from just under $80 a share. It's at last week, going into that trading week. It's at 42 right now, with a low of 35. It's just utter panic. But it was on a monster uptrend. Look at that uptrend. So some hedge fund ran that thing up and then had a margin call. I don't know where the margin call came from. But there. What else? TME, which is 10 cent. I had these calls. This chart was looking great. I had calls in TME, and they're like worthless now. I mean, look at that. This is a nice breakout. It was running up, and then boom, huge down move. So anyway, I think that the liquidation on this is probably over. And so there may be an opportunity to do a ninja kind of a trade here. Let's look at, I wanted to talk about Tesla because of an example real quick. So I'm looking at Tesla, and I'm looking at the time in early March where the RSI was under 30. And I want to look at the puts going into that and then the calls coming out of it. So,
I can't go back that far without...
well, we can't look at options that are already expired. At least I can't on the IB platform.
I can, but I got to be at my trading station.
Yeah, okay. Well, that would be cool, but it's not really required for this. So here we are looking at Tesla, and I want to bring up the 600... Well, what should we look at? The... Yeah, let's look at like 600 put or something. And I'm looking at the one from April 1st. And this probably isn't what we would be trading back then. But I'm trying to show more charts on here of what these options are doing.
Did you say 600?
Yeah, I'm looking at the 600 put.
For March?
Oops.
Of this year or last year?
Of this year.
Oh, sorry.
Yeah, no, you're fine.
Okay.
So in early March, the 600 put goes from a low of around 15, and it runs all the way up to just under 100. I think it gets to like 95. So huge move, and just in a few days. This is like a 3-day time frame. And if you were trading even shorter dated than this, it would have run up even more. And so now what I want to look at is if you're using this RSI as a signal to like basically like say, okay, the move is kind of exhausted, and say that you flip around and you buy some long calls. Let's look at those and see what those did. I want to look at the 700 call now from April 1st. Now, I mean, maybe this is kind of a back test. I don't know what you call it, but it's helping build our intuition.
Are you talking about this current move?
Yeah, so now I'm looking at the 700 call, and that went from like $5 to up over, let's see here, up over $50, almost $60. So another 10x move, and that's on the calls. And so the reason I wanted to bring this up is I'm looking at that down move in Viacom and Discovery and channel and things like that. And I'm thinking like, well, maybe there's an opportunity here on the call side that can have a huge upswing if you're right. And if you're wrong, you just fizzle out and lose a little bit, right? Now, timing is everything. Probably we want to drill down intraday into the charts and look for signals on short time frames, like 5 minutes. And maybe it's already bottomed. I don't know, but
I don't believe it has.
yeah. Hey, well, if there's more room to run on the downside on this, or are you looking at Tesla?
Yep.
So what I'm talking about is Viacom calls.
Oh, I'm sorry.
Yeah, I think Tesla's going to be range bound. My take on Tesla is that's going to be range bound. I flipped over to your screen now, Chris. I'm looking at your screen.
Oh, sorry. Let me go back to Tesla. Yeah, I'm looking. I'm not looking for a range bound Tesla here.
Okay. What do you see?
I am looking for a continuation of this current trend down.
Yeah, that's there's a lot of people that are going to be hurt badly by that. I mean, there are the true blue Tesla people. They're adding shares on the way down.
Well, you go right ahead. I'm not seeing that here.
Yeah, I'm not. I'm not in Tesla with anything. In fact, I'm not even putting a trade on in it. If I do anything, it's going to be wait for that extreme fear, and then I might get calls on it.
Let me do something real quick.
Yeah,
go
ahead.
back to talk about that, and then I'll ask you to bounce back over when I'm ready.
Okay.
Is that okay?
Yeah. So when I talk about extreme fear on Tesla, in order for us to get an RSI reading under 30 again, the price is going to have to be down closer to 500. There's a lot of, or maybe even less. There's a lot of traders on Twitter that are pretty negative about it right now. Like I follow this one guy, Barrington Trade, and he's calling for like 300 Tesla or 400 Tesla. I mean, just like really low prices. I'm not like exactly keeping track, but the point is it's like shockingly low numbers on Tesla. And right. That guy's pretty good. I like his content.
Barrington?
Yeah. You watch that guy, CJ?
No.
Yeah, you should follow him. He's pretty good. Unless you already blocked him or muted him or whatever. I don't do that stuff. I don't block people. I just ignore them. What I do, Chris, I follow lists. I don't, if I'm not following somebody, like, hey, if you're following me, I'm not following you. Hey, don't worry about that. I still read your stuff, probably, because I have you on lists that I read.
Oh, okay.
Yeah, I'm following you, Chris. Don't worry.
Well, I know that.
Yeah, I'm just saying, like. Yeah, I mean, I already follow too many people, and so what I do now is I make lists, and I put people that I want to read onto for certain things onto certain lists.
Yeah, I'm on the trade and finance list, I think.
Yeah.
All right, so 328, 330, 331. Well, in a couple of days.
So you're looking for a lower low. This is now it's now in a downtrend. Maybe there's a channel forming, and we're seeing like lower highs and lower lows. I mean, that seems to be what's happening with Tesla.
I don't know. I want to see this to there. Let me do this instead. I'll because this is the real way you can tell whether whether I got it right or not. As soon as I figure out where fine drawing is. There. And that's what I like to do. Is I'll do my work to find where I expect it to go, and then I get rid of all this crap, and I leave the oval or the box.
Yeah.
And that's how I get my target price. And then I'll just leave that.
I mean, you know what's funny? Yeah, I like that. That's a good technique, and then, you clean it up. I mean, if people look at my charts, they look muddy too. They're like, "Hey, this is like full of lines. It's hard to see the prices." It's like, well, I'm looking at levels, right? And that's what you're doing too. You put all that stuff on there, and you're trying to learn about what the important levels are, and then you can clear away the tools.
Right, and then you end up with that. Kind of like my DLTR. Can we bounce over to DLTR?
Wait! Before we do, those levels are like 400 and 500, which is that's kind of what CJ's calling for, is like 400.
No, you talking about these two? No, I'm talking about this right here. These are buy points.
Okay.
This is what I want to buy.
Yeah, and that's what I was talking about. Like at extreme fear, it's probably closer to like 500 or less.
Right. But this is where I expect it to get down to. On a more...
Now, if it gets into that oval, you think it's going to overshoot it to the downside and then bounce back into the oval?
Yeah, it'll probably wick down.
Yeah. Interesting. Yep. Yeah, I mean, the whole thing with Tesla, like I've been looking at not just Tesla, but TAN. Let me throw up the TAN chart real quick.
TAN?
Yeah. So, I mean, this was super strong since the COVID crash, the lockdown crash. And now it's down sharply off the highs, along with a lot of the electric vehicle space. The things that were so strong are now falling out of favor. And that's why I say, this is like a market that's forking. The things that were working are not working really much anymore.
That looks like what I expect Tesla to do.
Yeah. Oh, yeah, you're right. Whereas it's kind of grinding down lower into that.
Into a level.
To the right side of the chart.
Right here, if you look at your Tesla chart, it's got this little level right here, and then it runs up, and then it comes down here, tests that level, and it's coming back up, and then it's doing this thing at the end.
Yeah.
You look at my oval that I drew on Tesla, it's right around this area, this line, this level.
So at some point, do we get a situation where it's not an orderly sell-off anymore? Because that oval you drew, that looks like an orderly sell-off.
Do I think that it's just going to snap and break down?
Yeah, at some point. Like, where does that happen?
I don't know. I don't see it coming anytime soon.
Yeah, all right, great point, because the market itself is holding up pretty good. Like, if you look at SPY on the daily,
yeah,
I was surprised at how good this looks, just from as far as it's at resistance. It's about to hit the upper Bollinger Band, but I mean, it's holding up really well given the damage that's happening with AARK. Right. So, I mean, these are crazy looking charts. So, in fact, here's what I'm going to do. I'm going to put AARK and SPY as a ratio chart. And you can see, let me zoom out on this. Let's look at the weekly. You can see how AARK was outperforming so much. And now it's underperforming even faster. So is this the bottom? I don't know. I think kind of range bound. I think, sort of like how that target that you drew on there, it's not like a crazy move down to that target, but it's not ready to move higher yet. I mean, it's going to have to take some time to rebuild a base, and probably with AARK as well, not just Tesla. I mean, that's a scary. AARK is a scary chart right now.
Hang on, I'm typing you into YouTube real quick.
Okay.
So I can look at what you're looking at.
Cool. I'm going to flip over to GBTC.
Okay.
The Grayscale Bitcoin Trust, because the performance of ARK is going to be impacted by this one. I flipped to a daily. Yeah, I mean it's hanging out in a range. It's kind of what I guessed about Tesla. It'll be kind of range bound probably.
It broke through that channel.
Yeah, well, and it's a slightly downward channel almost.
Upward is what I got.
Well, the upward channel looks kind of broken to me, actually.
Yeah, that's what I'm saying.
Yeah, the upper channel's broken, and you know what? That moving average there is at the 50 day.
Mm-hmm.
It's either going to find support here or it's going to get trapped under it.
Oh, you talking about this line?
GBTC.
Oh, you're looking at
yeah,
okay.
yeah. Wait, all right, yeah, you're on GBTC. No, if you let's see here, what's the time frame on this chart? One day. Okay. Yeah, it's kind of that. That's kind of what I'm talking about. It can get stuck under moving averages. Is what it's vulnerable to get caught in now. So when things are generally rising and they're in uptrends and they're in channels, like this is all choppy now. It's not clean like it was.
I'm looking at your MACD, and your MACD is telling a completely different story. Oh, that's ARK. Never mind.
Oh yeah, is there a delay on this?
Yeah, I guess.
Yeah,
there
probably.
You go. Oh, okay. Yeah, that does look a lot better. No, that's got the same. No, the shorter time frame is above the longer time frame, so I guess.
Yeah,
GBT,
you know, it is what you're saying. It's that line you have. It just looks a little different on my chart. It's that line you have. So
no, that's a DMI.
The DMI.
Yeah. Oh, you're talking about the lower oscillator?
No, I'm talking about the channel you have. You drew channels on there.
Right.
And that's the channel. It's like really wide and choppy now, whereas it wasn't before.
Oh, it's beautiful. A lot of money to be made in that.
Oh, in that chop? Yeah.
That's the kind of chop I love to see.
Yeah, well, maybe let's take a look at Riot then.
All right.
Riot blockchain. I mean, this is the one to trade. If you ask me, I mean, the options are super liquid in this.
No, unfortunately.
What's that?
It don't look the same, unfortunately. That's range bound. I mean, it had this little pop-up right here. This area right here. Whoops. Didn't mean to do that. So sorry.
Right here. All right, I'm looking at your screen.
Let me zoom back in. From here, from the 100 to the 0 is what I would love to have traded.
So I'm not in Riot right now, but yeah, that's that pennant you just drew. The breakout of that, yeah, that would have been nice to catch.
Ah, you son of a bitch.
So I did some position trading in this one, and I wrote it from like 18 all the way up to like 80 and then down to 60 and...
GBTC? I don't see anything.
On Riot.
Oh, okay.
I'm not in Riot right now, though.
I don't see a trade in Riot right now.
Yeah. Well, probably then Bitcoin won't be doing much either. I mean, all it has to do is go sideways for now. It needs to consolidate.
Right. Bitcoin looks good. It gapped up. So it's got a gap and go going.
Okay. Well, then Riot will be up too on Monday.
Are they perfectly symmetrical?
No, they're not. But, I mean, sometimes Riot outperforms. The nice thing about it is it's a super liquid options market.
Mm-hmm. That it is, and it's weeklies, right?
Yeah, and Riot has weeklies. The other one is Marathon Patent, which is MARA, but Riot's better.
I just want to see there. Oh, wow, 209.
Oh, the IV?
Yeah.
Yeah, it's crazy.
They are gonna get you.
Well, that's what I'm saying. Like, it needs to consolidate. That IV needs to come down. I'm not
Yeah,
doing anything with Riot right now.
right. There was something you wanted to look at before we
Um,
did all this. We were looking at TAN. What
yeah, we
was
were talking about the electric vehicle stuff.
right? And then we bounced over to Tesla.
Yeah, hey, let's look at NIO. NIO. Yeah, it's down a
Ooh,
lot.
that looks ugly.
Yeah.
That was really ugly. That's like that reinforces the fact that I don't think Tesla's going to perform well. Ugly.
Yeah. Yeah,
I mean,
I agree.
my
I mean,
fast pick is looking okay, but oof.
I mean, if I'm in a short one, like the Tesla of China, the Tesla of China or whatever, like that sounds like a better short to me than Tesla itself.
You're right. I hear you. I can go with that.
Yeah, well, it's like this. You know, what do you want to short? The Starbucks of China, or do you want to short Starbucks itself?
Dude, I was really upset about Lufkin.
Luckin Coffee, yeah, you know exactly what I'm talking about.
I was upset. I was like, holy shit, that was a great fucking idea. Why did it go down so much?
Yeah, it's the accounting. I think they do accounting different over there, and sometimes it has problems.
Yeah, well, I like Lufkin.
Yeah, well, it's like a pink sheet now, though. It was hot for a while.
Yeah, well, when I saw it going down, I was like, well, never mind.
Yeah, exactly. And I was always skeptical of it. These Chinese companies, I'm just generally skeptical of them.
Mhm.
And sometimes they can outperform, but that sword swings both ways. The backswing on that stuff is incredible.
So Luckin is on the pinks, huh?
Yeah, it has been for like a year or two.
Holy shit, has it been that long since I looked at it?
Yeah, it might not even be on the pink sheet. Well, it might be out of the pink sheets now, but last I checked, it was on the pink sheets. I stopped watching it, actually.
Huh.
Yeah,
Crazy.
I mean, who wouldn't want to own that, though? What a great story, the Starbucks of China.
Yeah, right.
I mean, any of these companies do, like Baba, the Amazon of China. Let's look at that. I bet that's got
I
hammered.
traded Baba once, and I made money on it.
Yeah, well, that guy Chaz Markley, he trades Baba a lot.
Okay. Well, I traded it once, and that was it.
Yeah,
I don't
know if I ever did any trades in Baba.
AARK. Huh?
I don't know if I ever did any trades in Baba.
Mm.
Let me zoom this out. I want to look at a weekly. It's just not doing well. And you know what? It looks like FXI, which we already looked at earlier. It just...
Mm-hmm.
It has been underperforming for a while.
What's going on with silver, man?
Oh, yeah. Let's talk about that.
Why in the fuck?
So first, before we talk about silver, let's look at gold. Because really, silver's the tail and gold is the dog. It looks ugly, man. The gold chart looks ugly.
It does.
However, I mean, it could easily go up and hit the resistance at this 50-day moving average. That's kind of what it looks like it's going to do next. But that 50 days is going to be rolling over, and it's going to be a fight to get back above it. I mean, look at how it reacted to the 50, or I'm sorry, these are weekly, 50-week moving average. It reacted at that level many times, and now it's trapped under it. This is what I talk about when things get trapped under their moving averages. So, right. Yeah, it's not a good look for gold. Now we got to look at the gold to silver ratio, and then we'll look at silver. All right, so I have a pretty long-term chart up. It's a weekly chart for gold to silver ratio, and it's under 70. So what this means is, if you're going to be buying silver or buying gold, like, I mean, let's say you're a stacker and you I don't know, you get your paycheck or you close the deal or something, and you're going to go buy some metals. Well, when the gold to silver ratio is under 70, It's generally better lately, at least for the last like 10 or 15 or 20 years, to be buying gold instead of silver. But when the ratio is like 80 or higher, it's generally better to be buying silver. Now, this ratio is not so low that I would be taking all my silver and changing it for gold.
Right.
But, you know, it could happen if it gets that low. I don't know. I think it's really choppy right now, this gold to silver ratio. And you're not going to have a sustained bull market in silver without gold participating. That's my take on it. And the reason why anyone would want silver is because of it's going to be reintroduced as money, or it's a way to transport your capital from one monetary system to another monetary system. Well, why would you need to do that? I mean, we're just not at the point where inflation is running rampant yet. And I mean, I think that, you know, I had this theory about the people running these short squeezes that they were going to turn to silver and short squeeze that one next.
Right.
And it looked possible. And people are saying that, so I brought up the silver chart now. People are saying there's a cup and handle forming in silver. Silver looks a lot stronger than gold right now. I don't know that I would call this a cup and handle. It kind of is. Like, it's really choppy or whatever. Like, this is not the best base that I've seen in silver. The best base I've saw in silver was this one right here from June, July, and August of 2020.
I'm still waiting for your chart to change.
What's that?
I'm still waiting for your chart to change.
Oh, okay. Yeah, that's all right. It'll catch up here in a second. So anyway, this was an amazing chart in silver right here, where it had this like clear resistance level at like 2019 or whatever, and then it like made a base to attack it, and then it blew through it. Now, what I'm seeing right now is, yeah, there's a resistance level around 30, but it had a false breakout. That's really bad, and gold wasn't following. So we do have this, some moving averages, long-term moving averages coming up to support it. But if gold fails, then I don't have high hopes for silver. So, do I still have all those silver contracts I was talking about from before? Yes, I do. And what am I going to do with those? Well, I've already said it before. Like, if silver moves into a lower level, a lower range, which it looks like it may do, then here's what I'm going to be doing. I'm going to be rolling down in strikes, and I'm going to be rolling out to buy more time. So
I got to be honest with you. I'm about to short silver.
But you're talking about a short-term basis. I do that too to protect myself, to give myself money to use to roll, to do these rolls.
Until May, I'm buying silver puts. If you call that short term, then okay.
Yeah. Oh, totally. That's short term. Yeah.
Right. So yeah, that's what I'm looking at. Because I tried going long last week, and it just went nowhere.
Yeah, exactly. It's dead money right now. Silver is.
It is.
So there are things you can do. I know. Have you read the Jack Schwager's Market Wizards books?
Huh?
Have you read Jack Schwager's Market Wizards books?
No.
Ah, man, Chris, you love them, man. Anyway, I'll tell you about one of the chapters in there. It's this guy. His name is Akamas, and I forget his last name. I'm sorry, but he's a deep value investor, and he did. The way that he made his returns was doing lots of due diligence on companies, so that he knew about the solvency of the companies he was investing in.
Uh-huh.
And then he would do a really clever thing. He would use what's essentially the wheel strategy, where he starts selling puts on these companies. Jack even asked him, like, how are you doing this? How are you generating these returns in the value sector? You're a value investor when these companies aren't going anywhere. Nothing's happening. They're going down, if anything. And he says,
right.
Well, because I'm writing puts on these things. Yeah, he was selling puts. And so he was doing the wheel. And if he got if he had the stock put to him, he'd start writing calls against it. So he's generating income from these stocks, whether he owned them or not, by doing the wheel. So the wheel is you write puts on something you like at a price level you like when it's down. Do this only when it's down, when it's oversold. You know, like, I don't know, we talk about RSI readings that are low. That's a good time to write puts. And the reason you would write puts is because you would want to buy it at that price. Generally, buying puts is a negative behavior, right? You know, my dad even told me one time, he said, you know, hey, I'm thinking about writing some puts on this thing because, you know, I think that it's going to go lower. Like, I'm bearish on it. I'm like, why would you write puts on it? Like, why don't you buy puts? But what he was doing was, it's like the wheel trading, where he's collecting the income from it without even owning it. And if he does get the stock put to him, he doesn't care about the loss on the put. He owns the shares he wanted to own. And by the way, these shares tend to generally have a dividend, so that when you own the shares, you're collecting the dividend while you're writing calls against them when they get overbought. Every time they get overbought, you write calls against them. That's the wheel. And so anyway, when we talk about silver, let's talk about the silver miners for a second. So SIL is the silver miners. It looks much better than the gold miners. So I'm going to go to GDX. And that's like flagging down. But if we look at SIL, that's flagging sideways. That's great. And if we look at SILJ, it's the junior silver miners. By the way, like this is like long-term investment thinking, like very long-term. SILJ, that's good stuff. Long-term. And look, it's just flagging sideways. There's no damage being done here.
Right.
And so, anyway, the point is, I talk about the wheel, and I bring this up because a lot of these miners, like, they pay a dividend. It's not necessarily a big dividend, but AG is one of my favorite miners.
Yeah, I know. That's where I thought you were going.
Yeah, exactly. And so what am I going to do? Well, I might write some puts on this. You know, I might do the wheel on it. But I've still got a lot of contracts on it that are out of the money and they're long dated. And you know what I'm going to do? Is I'm going to roll out and buy more time. And I might fund that by writing puts. And if I get the stock put to me, it's like, well, I wanted that stock anyways. So, yeah, the whole value trading thing, it's a very different mindset. But when I look at the chart, the weekly chart for AG, that looks pretty good to me. I mean, yeah, it's pulled back, but it still looks pretty good.
Yeah, I would go long this.
Yeah, but like silver itself, I agree with you. Like gold is worse.
Over futures. That's what bothers me.
Yeah, and you know what, Chris? What I would suggest is, like, look at gold, man. I mean, gold looks like an even better short than silver. That's an ugly looking chart. If that was a stock, I would say I could keep on going lower. But you know what? Here's the other part of this story.
What are you talking about?
GLD.
Oh, GLD.
Yeah, the other part of the story is bonds. It's long-term government, U.S. government bonds. They're not doing well right now, and that's like a reason why gold is down. Because what happens is when those U.S. government bonds go down, then the interest rate goes up, and that interest rate is competing with gold for investment dollars. So
if this bounces off of my trend line, I'll go long.
All right. Hey, wait. Are you showing a chart? Okay, let me get this chart up here for everybody. All right, walk us through it.
Well, it's pretty simple. I'm going to draw this here. I'm going to draw this here. And I'm going to draw this here. If this price action bounces off of this trend line and goes back up, I will ride it all the way to 144 ish.
So if it catches a bounce there, then what you're really saying is, like, we've had a reversal pattern.
It looks like it. That looks like an inverted head and shoulders on the daily, albeit small.
Yeah.
The only thing it would have to, oh no, it already filled that gap, so we're good. Yeah, if it bounces off of that and it goes up, all I need is one good candle.
Yeah.
And I'll take it up to 144.
So I still have that TLT position I've been talking about, the ratio back spread.
Uh-huh.
And the way that works basically is like TLT can drop all at once, and I don't lose money except for what I pay in time. All I'm paying is time. That's all.
Right.
And it is implied volatility sensitive position though. So if IV goes down, I lose money. If IV goes up, then the position becomes worth more. However, the way I've structured it is it's essentially like it's like having a spring. And the more that spring gets compressed, like I just keep rolling lower the position. And it looks like we are bottoming on TLT. And once it bottoms, I've still got like 2 months to go on the current position without even doing any rolling.
Yeah, we said that once before, though.
Well, yeah, I've rolled down and I've rolled out. But, I haven't really lost hardly anything on it. I just paid a little bit of time. And so
I haven't I didn't make as much as I wanted to, but I have not lost I haven't lost anything on TLT yet.
Yeah, and this one's tricky. It's so tricky because as this thing goes down, you would think that would affect the stock market more. And so it's been bewildering to me that it hasn't affected the stock market more. It's like eventually central bankers will care about this going down lower, and they tip the stock market over to.
It's really not that bad right now. I mean, it's taken back a lot. Don't get me wrong.
Yeah.
But it's not horrible. It's still got another 12 points to go for them to get really worried.
Yeah, good point. So let me put a chart up here. I'm going to do the monthly chart for TLT. And you and I have talked about this before, where I put up this monthly chart, and I show that on the monthly, there's a 50-month moving average on this chart, and every time it hits it, it gets support big time. And it's almost there. It didn't even actually quite hit it yet this time. But that's been my sort of like low-end target for where I think it might go. And it doesn't always hit it, but then it has these big upswings. And every time it has a big upswing, the market goes down. However,
right.
It's not necessarily going to just bounce right back. Like these upswings are fairly unpredictable to me as far as the timing. Other than the fact that they do seem to correlate to, a lot of times they correlate to macro events. So in 2019, it was like their interest rates being interest rate hikes for short-term interest rates drove it higher, and then COVID panic drove it higher, and then the stimulus has been driving it lower since then. If you look at other upswings in TLT, another major upswing was in 2008, where we had the financial crisis, and that caused TLT to surge. And then following that was there was another crisis, a European debt crisis with Greece and Italy and some of the peripheral countries in the Eurozone, and that caused a major upswing in TLT as well. So are we facing something like that? I don't know, but there's a lot of price movement there, and there's certainly potential. So,
right.
TLT's been interesting. And by the way, generally it goes up. TLT is unique because of the correlation to other assets is low. There's almost nothing else that's correlated to TLT. It lives in a world of its own.
Right. I always thought it was because the Fed keeps buying treasuries, but
oh, yeah, absolutely. You're right. That's why we're in a world of low interest rates. If they let the market determine that stuff, rates would be a lot higher, probably. And what they're doing is they're pricing out other investors from the treasury market. It's really crazy.
Agreed.
All right, so hey, let's talk about short silver for a second. So
all right, short silver.
Yeah. And hey, just let me know if you need to go, Chris. It's not my intention to keep you up all night. I could do this show for hours, man. I mean,
What are we looking at? SIL, AG?
No, just do SLV probably is what you'd be buying puts on, right?
Either that or pause.
Or what?
Pause.
Oh, yeah. Pan American.
Yeah.
I mean, that's so cheap on price, though.
Yeah.
But the SLV's pretty cheap, too.
So I'm not the silver futures look worse than this does.
Yeah.
Hold on a second.
All right, yeah, go ahead.
I guess they're about the same. Yeah, all right. So we'll go back over to SL. Let me look at pause real quick.
Sure. Yeah, this chart is so choppy, it's almost unbelievable.
It is.
And then you can make a lot of money in that chop.
Yep. All right, so we'll go back to SLV.
Yeah, we don't have to. If you want to look at pause, I'm fine with it.
Nah, I don't like the way that chart looks.
All right.
It's not clean enough for me. This is clean. This is deliberate. This is short me now. That's what it looks like to me.
So is your downside target 18? You think it's going to go back down to that support previous resistance level that became support? You and I talked about this earlier, right? That 18, 19 level breakout.
Yeah, that was a while ago.
Yeah, you think it'll retest that?
I'll tell you in a second.
All right. Hey, by the way, you got to look at this guy, Trade with Ninja. He uses fibs like you do, and anyway, I mean, I think you might like this guy's trading style. It's
and you have between 18 and 20.
Yeah, that's a lot lower. That's big. That's a big move for silver.
Well, I don't know how long it's going to take, but give me 1 second. Maybe you should ask him to come on.
Yeah, I might. I don't know that he will. He's how do I put this? He's like in his zone, and he doesn't like to be disturbed. I don't know. It's weird.
Oh, that's fine. I get it.
Yeah. Yeah, it would be fun to have him on, though. I mean, I think we'd have a great time chatting with him.
Oh, I'm on a weekly. That's why it looks so weird. Duh. It's like, why does this look so weird? Oh no, I'm not saying for me to be on at the same time as him. No, let you and him have a conversation.
Well, you know what though? If I had him come on, I'd love for you to be there because there's a lot of overlap with your. So parts of his style overlaps with mine, and parts of his style overlaps with yours.
Oh, really?
Yeah. So it would be a really fun panel to have.
Hey, whatever happened to your day trader buddy?
Which one? Oh, yeah. My neighbor. Yeah, he wants to make sure that, like, so he's one of these people that, he's trying to stay in his home because he has a young child and he's worried about, getting the child sick in a pandemic, right? Totally reasonable.
Right. Yeah.
And so he's waiting a little longer before he is going to come over. So, I mean, I'd love to have him on here, but he may dial in. So,
right.
Yeah. We should totally do a panel with him, though.
Hey. Sorry. Son about to make a big mistake by saying something really bad.
Yeah, I get it. I get it. My two kids have potty mouth sometimes.
That's not working out. I'm just going to stick with 18 and a half and 20.
Yeah, the prior that was the prior resistance level. Now it may become support.
We got a gap down here that hasn't been filled at 1850 ish.
Yeah, that's a lot lower. Whew.
See it? Right here?
Yep.
We got another gap right here that hasn't been filled either.
Dude, I made so much money on that breakout. It was ridiculous. I never made money faster than I did on that breakout.
I'll be honest with you, I wasn't paying attention. I was still jumping up and down that the market was going up in the middle of a pandemic.
Oh, yeah. Dude, it's been crazy. This whole, everything since the lockdown's been crazy.
Yeah.
I mean, a lot of people have just gotten their money in long since then because they got stimulus checks or whatever. And they've been doing good and they think that the market's easy. And it's just like, man,
No.
just wait. Just wait. You better start studying now.
Yep, either that or you better start pulling profits, motherfucker.
Yeah, well, nailing down the selling part's really hard. I actually struggle with that. That's something I'm trying to work on. Every trader should have a list of things they're working on internally for themselves. And like for me right now, here's what that list is. It's be more patient, let the trades come to you. You don't need to be in the middle of every move that's happening that's awesome. You know, you can let a lot of those go by. And yeah, I'm trying to be more of a like Mark Cook says, be more of an outie trader than an innie trader, because I'm an innie trader by default, and so I have to like try and suppress all of the problems that come with that.
Oh, if I have a fault, my fault is that my list of companies is not is not big enough, and I overtrade. I used to overtrade. I am actually fixing that.
Yeah, I noticed that when I watched your show that you put that recording up. I thought, I mean, he is like really focused, and he's fine with waiting on the sidelines in a way that like I don't know. I jump around a lot, and so I'm trying to become more like that. I'm trying to like not jump around as much, be more patient as a trader. Let the opportunities come to me, and just be comfortable with the fact that like there will be more opportunities. I don't have to catch every one of them. It's
hard.
As I transition to a more shorter term trader from a longer term trader, I get more comfortable with that over time. Because when you're a long term trader, how many times does the VIX go over 40? How many times does the VIX go over 50? That's actually really rare. Those are the great opportunities for the long-term traders. And they are very rare. And so you can't miss those and still be successful as a long-term trader, at least not easily.
Right.
I mean, look, the best way to get good forward returns on the market is when it's down. So when it's down, you got to be buying in as a long-term trader. That's not true with short-term trading. Like we looked at earlier tonight on the show, we looked at an opportunity where you can make 10 times your money easily on a scenario that happens on the S&P 500 a few times a month. When they are at 15-minute RSI, when that's under 30, this happens a few times a month, and you can make a lot of money on it. Maybe not every time, but I mean those kind of opportunities. It's the same thing. Here's what it is: people throwing away assets. And in this case, or in the case I'm describing with S&P 500 15-minute RSI, the market makers are just throwing away short-dated call options. They're throwing that stuff away. It's super cheap, and it's not any different than when the VIX is over 50 or it's over 60, and you get a chance to buy distressed assets that pay dividends, and you could buy them at deep discounts and make 10x on your money that way, or 3x or whatever it is. So it's just that the time scale is different. So you have to trade it differently because the time scale is different. But the point is, those opportunities are there and they're frequent.
All right, I got. Is there anybody watching actually?
Yeah, we've got a few people watching.
All right, put this screen up.
Yeah, it's showing. Looking at the dollar? No SPY.
There we go.
Okay.
Oh, God. Yeah. All right. Let me get away from this. Oh, I can't. So I got to zoom in.
Okay. Wait, you're zooming into after hours? What do you... Oh.
No. Well, it doesn't really matter what it's on. I'm trying to show something here.
Okay.
That is a time frame that can actually profit you money. Okay, so this is a poor example because it's after hours, but I can't show you. Well, I guess I could show you in the middle of the day. Yeah, I can. All right, so as an example, here.
So you're in like power hour, right? It's like an hour and a half till market close.
You see that?
Yeah.
This is called I'm pretty sure this is my Renko chart. Let me make sure. Nope. I don't know. Yeah, it's going to populate. All right, great. So on a Renko chart, there it is. You can find something like this easily for day trading. As an example.
Okay.
And you're looking at, once it breaks below the neckline,
Yep.
that's almost $1. And that's just one example.
Yeah, and by the way, like I see that target line you have, and it went right to it, and that became support.
Exactly. And then it bounces right off of that on the double bottom, and then it channels, and then it breaks. Well, you got the little Darvis box thing going on here. And then once it breaks above, boom, you got another $1. So this is what guys use in futures.
Oh,
Me being a futures trader, I wanted to try it out on the SPY, and it works.
Yeah,
So I just wanted to show that to people out there. It's called a Renko chart, or a Renko time frame, and the time frame.
So how do they make Renko bars? Because those are not time bars, are they?
No, they're range bars.
Range bars.
There it is.
Wow.
So you go to the time frame. You put it in range. You select your days. I do 5 days. I do 4 ticks, right? And then you come here to your style, and you change your range type to Renko. You can do range bars, or you could do Renko bars. And if you do that, then this style of charting comes up. And if you don't trade it, because you don't know it yet, but once you do get to play with it and watch it during the day, or watch it in the overnight, watch it in the futures. Let's put it on. Let's put it on the ES right now. Look at that. You watch your channel, and when it breaks out, take it.
Yeah, interesting.
So I figured, since you had some watchers, I wanted to show something that's a utility in time frame that they can use during the day, and it mostly only works for the SPY, because the SPY is so wild during the day. So,
it is. It's if you try and run stats on it, and you try and break it down and like make trading systems for SPY using mechanical rules, it's one of the hardest things to come up with something that works on. And I don't know why it's so tricky, but it is compared to like a lot of other things.
I have this oscillator right here I created. That's what the one we're looking at right now. It doesn't work on the SPY. It absolutely does not. But it does work in Renkos. It does work in the Renko. So again, it's the 5-day 4-tick range, and then if you're using Thinkorswim, you go into style and you change your bar from a range bar, which it will default at. You switch it over to Renko, and this chart will pop up.
Yeah.
Then play with that and see how your profits increase.
Hey, where'd you learn about that, Chris?
I got this from a gentleman named Mr. Yen.
Oh yeah, I like that guy.
He and I asked him about it a few years back, and he wasn't nearly as popular as he is now. He's exploded in popularity.
Yeah.
And he took me on, we were both online chatting on Twitter, and I asked him about it, and he walked me through the whole process of setting it up, because I used to watch him trade it. And he set me up through the whole process, and I was like, oh man, thank you very much, blah, 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 blah. So yeah, that's how I learned about the Renko chart.
Yeah, and you know something else he uses too is he uses those envelopes. Like you were showing me some envelopes the other day. This was probably like 2-3 weeks ago. You were showing me some price envelopes, and he
You talking
puts
about the ribbon?
what's that?
The ribbon?
No, it wasn't a ribbon. It was two. You use two different kinds of envelopes. So not the. Hang on. Let me bring this up here. Not the Bollinger Bands, but he uses different kind of bands.
Well,
And he uses two different kind of bands. And when one's outside the other, then it tells him things.
He uses the Keltner a lot.
Keltner, yeah.
And I think he uses the Imoko Cloud, or however you pronounce that.
Yeah.
Ishimoto or whatever it is. Yeah, I don't use that.
Well, you know what's fascinating to me is if you go in and look at how all these things are calculated, and you understand them, like some of them make a lot of sense. It's like, oh, Bollinger Bands is like doing a statistical backtrace on it and then like just showing what the standard deviations are.
Right.
Like, oh yeah, of course that makes sense.
Yeah. So anyway, I figured since you have some people actually watching, this is something that they can utilize in their trading if they're doing short-term trades.
Yeah, that's cool. Hey, let's talk about IWM real quick versus SPY.
Okay.
So if you look at SPY, it looks kind of okay, but if you look at IWM, it's like, whoa, this is what we're talking about. Two different markets happening right here. The fork. IWM was outperforming for a while, and now it's struggling. Like, but all of a sudden, though.
Well, it gapped up Friday.
Yeah, it did, but look at how far off the high it is compared to SPY.
Well, yeah. Yeah. Hey, Liam. Bring it down a little bit. Thank you. Let me do this. How do I do that? Add study. Compare with. Compare. Hey. Stop it. Sorry. Hold on. Are you still showing my chart?
Yeah.
All right. Give me 1 second. I don't do this enough, and I really should. Really? What? All right, so there we go.
Awesome.
Purple is SPY.
Awesome. Yeah, that's what I wanted to see. SPY is like hanging up there. It's like really close to the highs again. But like the NASDAQ is not as close. Semiconductors, some of them are doing good. Some of them are not doing as good. Like NVIDIA is not doing as good, which I would not have foresaw. But I mean, I thought NVIDIA was like really going to be ripping this year, but it's not. What's crazy about that is everybody's trying to get their product right now.
Huh?
Everybody's trying to get those NVIDIA boards right now. In fact, there's car companies that are shutting down. They're like, hey, we can't make more cars because we're not getting the semiconductors.
Yeah, I watched Emily Chang Friday. She was talking to somebody about the chip shortage.
Yeah, it's and you know what? A lot of chips are probably on those boats that are all stalled.
That very well could be. Very well could be.
Yeah.
So if you look at the SPY, the purple, and the IWM, that's just insane. How?
Yeah, look at SPY hooking up. It's like right about to hit a new high, but IWM is like way off the high right now.
Yeah.
Crazy. Your chart shows it well.
IWM is forecasting the SPY.
Okay, go on.
It just looks like it's front leading the SPY. The last.
Yeah, IWM gets beat up so much. It's so bad. Like as far as it gets hurt so much over all, like everything. It's so vulnerable compared to SPY, And one of the reasons is like even the minimum wage thing, for example, like, oh, well, you know, we're going to make a $15 minimum wage. Well,
Right.
that doesn't hurt SPY, but it hurts IWM.
Right.
It's that kind of stuff. The price of crude, oh, that actually helps SPY, but it hurts IWM. Pandemic, that helps SPY, but it hurts IWM. It doesn't actually help SPY, but whatever. My point is, here's what helps IWM: stimulus checks.
Really? You think?
Yeah, I think so, but like, you know, this is a sell the news event. They're like, oh yeah, stimulus checks are going to happen, and they sell the news.
Right.
But not with SPY. It's like SPY doesn't care about stimulus check.
The Qs seem to like them a little bit.
Yeah.
Well, it looks like the IWM is front running the SPY, or the SPY's front. No, the IWM's front running the SPY. That's what it looks like to me.
Yeah, and you know what? I put out I do a ratio chart of IWM to SPY quite a bit to monitor this. Like I regularly look at that. And heading into the pandemic, it was looking so ugly. I couldn't even believe it. I was like tweeting it out all the time. Like, look at this chart. It's ridiculous. And then it's caught a bounce. But, I mean, a lot of things that have happened since the COVID crash, the lockdown crash, are counterintuitive. Like, yeah, look at that. So IWM was struggling. And then when the lockdown crash happened, it went down so much even more.
Right.
And then, you know, because it was down so much, it's rebounded a lot. But it's a ratio worth watching. IWM and SPY. Here, let me just put it on the stock charts real quick.
Cool.
IWM and SPY. Let's look at a weekly. So what does it say right now? I mean, it's yeah. So if you look at this, it really hit the bottoms in February and March of 2020, and I thought it was going to keep going lower. It didn't. This is one of those counterintuitive things, sort of like the casinos going higher. Like if you look at those casino stocks like Penn and MGM, like they're up so much. I went in there. I almost bought a whole bunch of them at the market bottom, but I didn't. I ended up going into MLPs and mortgage REITs or MREITs, whatever you want to call them.
Right.
But you know, in hindsight, I would have did better with the casinos. I mean, maybe casinos is just what I should be trading all the time.
I was going to say, you mean trading, not playing, right?
Yeah. Oh, you know, I don't really like going in there all that much. It's just, it's okay. It's like over glamorized on TV. It's not that great of an experience in real life.
I've never been.
You've never been in a casino. Well,
no,
here's what I'll say. Don't buy the hype, man. It's not like what they show you on TV.
I was more of a horse track.
All right, now that makes sense.
Yeah. Oh.
So you got crude oil chart up. Let's talk about crude. You got the crude chart up.
I do, and I want to talk about it when you're done with what you just brought up a second ago.
Yeah, I'm set. Let's go. Let's talk crude. So last time you were on the show, Chris, you called out crude. You were like, hey, this is like so extreme. We're about to have a down move. And then we did. It was like the biggest down move in a single day. It was like 9% down for USO, I think, that had happened in so long. Anyway, you called that on the show, and then we got that down move. You and I were both in it. We both benefited. Now I'm already out. I closed mine out.
Yeah. I'm still holding my long.
You're long put.
Right.
Right.
No. I'm long call.
Oh, well, see, last time you were on, you were talking about a break to the downside. And that's that big yellow bar right here.
I already took profits on the puts.
Yep. Yeah, exactly. Me too. Yep. I'm out too.
Still holding my calls.
Oh, you still have the call from that. Oh, right. I do too. actually. Yeah, I only closed out the put. I'm like, this is good. Close out the put.
I paid half of my money back already in my calls.
Yeah.
And go figure, they're the shorter freaking
The shorter time frame, yeah.
right?
Yeah.
So I'm gonna hold them until they freeze. This is what I want to talk about. I'm gonna hold them until they free up that damn boat. And as soon as they free up the boat, I'm selling them.
All right, dude. Yeah, me too. I'll do the same thing. I'll be watching for that on Twitter. You know what I do? I go on TweetDeck and I have a bunch of lists, and some of them are news feeds, some of them are traders, and I have all these different things on TweetDeck, and it's just all day long those tweets scroll by. So I'll notice if they free up that boat, and when they do, I'll get rid of that call.
Right.
Because I have that same position. I legged out like you did. It's like, why would I close this call where I'm closing the put? There's no reason to.
Exactly. I mean, I almost went to nothing. Almost.
Yeah.
And I made 50% of it back, so.
Yeah.
I mean, I was already visiting, worthless, so it didn't mean anything to hold on to it.
Yeah, for those calls, exactly. We got those as a hedge, and then now it's like, okay, well, now we're going to play the upside. We're cashing in on the downside.
Right.
Yep. I did the same thing.
So that's how that trade's working.
What I should have done was just close the put out on the first day. That would have been the best in hindsight.
Yeah.
But we couldn't have known.
You always think you could squeeze out a little bit more.
Yeah.
So I didn't show you my DLTR. And
Dollar Tree. Yeah, let's talk about that.
I called this out on the show as well.
Yep.
And I called it out. I called it out on Twitter a week ago, and I called it out on the show about 2 weeks ago, I think it was. And I put this target here about 5 or 6 days ago.
Yeah.
I think it was Monday. And and we were down here.
Yep, that's right. And it's moving quickly to it.
Yeah, and I expected, believe it or not, despite this, I expected before this trade closes to get to here by this date.
Yeah.
That's my target. I can actually readjust my target now. Activate.
Now, are you carrying what strike calls are you carrying on this one?
Not anymore. I actually got out here because I expected this today.
So that's live right now. ES is minus 24. Oh, I see. You close the calls out because you're like, hey, this is exuberance.
Yes.
Yeah, and so you were looking to buy puts, but you closed out longs. Yeah, that makes sense.
Right. So I bought my puts in the SPY, and I closed out my longs in DLTR. And after we get this downside move, which will probably just last for tomorrow, then I'm going to go long again, maybe in a week.
So you'll buy a pullback.
Yes,
you'll buy a pullback in Dollar Tree.
And
that's your target.
Yeah.
Got you. Okay, that makes sense. If we get there first without a pullback, will you short?
No.
Okay.
I need to see more. I need to see what it's going to do after that.
I mean, it would be ugly if it failed there. And the reason I say that is look at that old high at 119.71. It just really jumps out at you.
My price target is actually 125 for that date. I just don't have the retracement up that I used. This shouldn't even really be here. And neither should this. I just didn't take them off. But my price target is 120, the top of this, which is 125. Yeah, 125.
So, by the way, this kind of reminds me of the Camping World Holdings. I got out of that. We had talked about that one. It was another stock that was challenging those old highs.
What's that chart?
CWH, Camping World Holdings. Yeah, okay. This was a similar stock chart. It was like testing the old highs. I got out of this.
Oh, okay.
Yeah, see how it failed? Look at how it failed.
Yep.
It went up there and it hit like a box like what you were targeting, and then it failed.
And they do that.
Yeah. Well, I mean, that's why I asked you if you were going to short. I mean, it looks like the same chart almost.
Yeah.
But this one's ahead of time.
It's hard to say what they're going to do until you're watching the intraday candles.
Yeah. Yeah.
You know?
So I did not like this, and I got out of it. You know, I was pretty bullish on this, and I closed it out.
Huh?
I was pretty bullish on this, and then I closed it out because it failed after
Right.
where it should have broke out. It failed.
Yeah. That was you. You were basing that on the cup and handle.
Mm-hmm.
Well,
yeah, I was bullish heading into the new highs, and I got into it ahead of that. And then it went up, and it failed right away. And then like days later, I got out because I had the protective put. I didn't hardly lose much but time, but.
Right.
You know, it's you want to see these things work. It's frustrating when they don't.
Yeah. What the? College try, not Boy Scout try. You gave it the old college try.
Yeah. Well, by the way, a similar thing happened with Tesla at 900. If you look at the Tesla chart and you look around 900, you'll see a similar false breakout there.
Really?
Yeah, you got to zoom in for it, though. Yeah, see that false breakout at 900? That's what I'm talking about. Look at that.
Oh, okay.
Yeah, and then it broke down big time.
Oh, I see it now. I see it right here, right?
Yeah. Yeah, exactly. So right there, it's like, okay, we're going to new highs, and then it hits a new high above the old candle and immediately fails.
Oh, that's a nice little bull flag right there, ain't it?
It was. It looked great.
Sorry, that's a bull pennant.
Yeah, bull pennant. It looked great, and then it failed. Like right away.
Yeah.
So just like the Camping World Holdings. So I got out of it.
Let me see. All right, this is what I want you to do. We didn't talk about this pre-show, and I meant to bring it up. What I want you to do is throw charts at me, like maybe 3 or 4 charts, and I will give you or let's just do one for now. Just throw any chart you want at me. I don't care what it is, and something that you have a bias on without telling me. I'll tell you what I see.
All right, IYR.
I actually watched that.
Oh, yeah, it's already on your list. All right, awesome.
Yep.
You've already got channels drawn.
I do.
This is great.
He's such a good one. She died. What? We gotta kill her. She's on big health.
Bullish.
Yep. I agree. Bullish.
And it's funny that I say that because it's at the top of the channel, but that new white soldier is a commanding candle in the IYR.
Yes.
So whenever you guys see a new, this is called a new white soldier right here, an NWS.
Yep.
No matter where it is, IYR usually follows up with a lot more of them. For example, here, well, not here, but here. Where's another one? Here. That's on a pullback. Here's another one. It continued up a little bit more.
Yep.
Here's one off of a pullback. Continued up a little bit more. Get out of my way.
And so, by the way, like, this chart is bullish. However, like, if you think about it, it's counterintuitive that IYR would be going up right now. But that's part of the mystery of the market, like it's going to do things that are counterintuitive. And that's what's happening here. I mean, to me, it's like, well, why would commercial real estate be worth anything what it was before the pandemic? Companies aren't like paying rent. They're looking to downsize, whatever. Like, is there really a bunch of downtown office space that's like dying to get filled? I don't think so. But it doesn't matter. Like, what's the price chart doing? Like, that matters. This is a signal from the market that's telling you.
Exactly. Oh, look at that. I just saw it.
Oh, it looks like these are main characters.
You see it?
Oh yeah.
And then we'll throw one of these up here
Yes, it's taking her down. She's gonna die.
to support resistance level.
She just died.
And it looks like my price target would be.
We gotta kill these guys. These suck.
Hey, language, kid. Oh, look at that. Look. I drew this here because of support.
Oh, the gap. There's a gap there, Chris.
Well, I drew it because of this resistance right here.
Yeah.
And I just threw my fibs up.
And there's a gap from February or March.
The 161 hit my 94 target. So
wow.
If that doesn't tell you something.
Interesting.
So I guess calls for 94 are in order for 2 weeks.
Okay. 2 weeks, 94 calls. Let's see what they are. IYR.
Oh, wait. Is it another short week next week?
Yeah, next week's 4 days.
But
that's not going to affect you if you're buying 2 week out calls. All right, so let's see here. April 9th, 94 calls, 50 cents.
50 cents?
Yeah.
Those are real.
And so if it gets to 94 at expiration, I mean, you can't let it be at 94 at expiration. You need to go out before then.
I was going out to OPEX because they're two short weeks back to back. I would do the 94 OPEX.
Okay. All right. Yeah. Okay. Gotcha. April 16th.
Now remember, we're pulling back tomorrow, so you could get them on the cheap.
Yep. Yeah, you're right. What we're looking at right now is Friday prices.
Yeah. So, well, I would say 50 cents on the 93.5s. I think there's going to be a half off sale.
Okay, 93 and a half. Yeah, half off. All right, 50 cents.
And what I'll do here is I will create an alert to let me know
if
when
the
that's
price gets
trading
there.
at 55.
All right.
All right, at or below 55. So if I get triggered, I'll buy them, and then we'll see where they go.
Yeah, cool. This is a good trade idea. All right, what else? You wanted to do a few of these. So that was one. We've already talked about a lot of stocks right now that are on my radar, but let's talk about one that we haven't talked about tonight, which is AMC. Let's do AMC.
Oh, hello.
It's wild. It's really wild.
Bearish.
Ooh, yeah, I see that.
Oh,
I actually don't have a view on this one.
oh, that was easy enough. I didn't. Hey, bro,
$7.36.
It's got mad resistance at like 11. You think it's heading to 7?
Yeah.
Yeah. I mean, the resistance at like 11 and 12 is huge. I mean, this whole thing is ridiculous with AMC.
All right, so
Get down.
$7 puts. We don't even have to do that, do
Oh,
we?
you gotta be kidding me.
We could do $8.50. You know what? Because it's AMC and the market's going down, if the market doesn't miraculously recover overnight, we could probably get into these at 50 cents for the 850 at April OPEX.
Wait, I see you guys. Oh, no,
Yeah. That might print if it goes really low, if it makes a big wick.
Oh, God, no.
Create alert. This one I'd have to get at 50 cents.
Yeah.
Create. And if that triggers, I'll buy a contract of that.
Ow, ow, ow.
All right. What else? I got a bunch of stuff on my list. We already talked about a lot of it. Oh, I got a fun one. XLU.
XLU, I never heard of it.
It's the utilities ETF.
Oh, long.
All right, that's what I was thinking.
Damn it. Well, it's time to go play mine.
So, I forget who it was. Yeah, somebody was made some great calls on this one on Friday.
What? That guy, I don't want that guy.
Okay, so now let's put a fib on it.
Oh, hey, we got a call out in the chat too. Somebody's got a ticker. You want to do one more after this one?
Sure, absolutely.
All right, cool. All right. Spody Jr. We'll get to yours next.
Do this.
I have no idea what this. I've never seen.
They want to do BlackBerry. They want to do BB.
People,
All right, this was a little off, but it is lining up, and I'm looking at 69.37
Okay.
for April OPEX.
Yeah. All right, and there's right before the lockdown crash. There's like old highs around that level too.
So you could probably get into this. Well, look at the spread. You'll have to see what it's trading at in the morning.
Yeah.
Actually, this would probably you see what it's doing in the morning. Maybe I'll cover it during the morning show.
Cool. Okay. All right, so let's do BlackBerry now. You want to do BB?
BB. Woo-hoo-hoo. Yeah.
Yeah. That thing had a wild move. You know, it looks like the marijuana stock charts too. It's like the same trade. Like some funds had the same portfolio or something. I don't know.
All right, so we got a quasi support here. This is not an easy one. Thanks. It's cool. I like being tested. Range bound.
Oh, get down.
Yeah.
Gonna go up, but range bound. I don't think it's gonna break through. If it
On
does,
to the
it'll
downside. Yeah.
Yeah, I think it'll wick down, but I think it's gonna stay in range.
Yep.
Does anybody else have one? Or does that person have another one?
Hey, Spody Jr., got another one? Maybe I'm mispronouncing it, their name. I don't know.
Oh, you shut up.
Yeah, I don't know. No symbols yet, but I'll tell you if they say one.
All right.
So, with this one, hang on. Let me look at this for a second. I mean, it went up so much. Like, it's exhausted. But here's what it reminds me of. GameStop had a secondary rush, and it happened after it had based for a while on a low period, like what's happening now. So that range that you drew in BlackBerry, yeah,
right.
Exactly. Like see how I formed a tight range and the candles started getting really tight. So that's what to watch for if you think that it might make another rise. What you need to watch for is the candles that keep getting tighter and tighter and tighter. So on the chart you're seeing right now that Chris is showing on February 15th, see all those tight closes?
Yeah, right here.
Yeah, right there. That's where I got into those calls for. I bought them for 70 cents, and they went up over $12 a call.
So what?
It made over 100 times the money on calls. But what I had to watch for was the really tight closes. So if you flip back to BlackBerry, what you need to watch for there is watch for really tight closes or contracting range. So if you look at this, it's in a choppy range. It's in a wide range now. But if it starts to closing real tight, that's when you know that hey, now maybe it's time to get ready to put a trade on.
Right. So you're looking maybe for something like this right here?
Yeah, there's a few tight closes in there, but I would look for even more than that. If you look at GameStop and you really zoom in on it, you'll see even zoomed in, it's still really tight closes. So, I mean, the channel you drew, that's the right channel on BlackBerry. And so if you want to trade it in the range, like, you know, if you're already carrying this stock, you could let some go on the rises and with the intention to buy it back for cheaper. But as soon as the price range tightens up, don't let go of your shares. Like that's when you gotta like hang on.
Oh wait, we did AMC, right?
Yeah, we did AMC.
What did I say? I don't even remember.
Well, you were in GME. You went over to GME for a minute.
No, I mean, what did I say about game?
Well, AMC's different. It looks a lot choppier.
Oh, I said lower, didn't I?
Yeah, you said lower, but this is a different chart. This is a very different chart.
Well, I just found it funny that I said lower because they're opening up the movie houses, so it was really weird that the chart's showing me something lower, but that's what it's showing.
That's sell the news, right?
Yeah. Apparently.
Dude, they should make a GMEJ. It's sort of like GDXJ, right? The junior GameStop.
All right, so did that follower come up with something else?
Yeah, no, I don't see any other requests in the live chat. But
okay.
yeah, look at those really tight closes on GameStop, dude. I almost texted you, Chris, when I saw this thing start to trade up off those really tight closes. I almost texted you, man. I wish I did because I mean that was a monster move it made right afterwards.
Yeah, it did. It most certainly did.
So, what's your time frame here? This is what's the time frame on this chart?
That's a good question. So let's go from this candle to this candle.
Okay.
I'm not seeing anything.
That's an insane move. That's crazy.
Yeah. This candle right here.
Yeah, I mean, the low was like 40. Remember that? And they had like these hearings or whatever with the senators. And it's like it wasn't going lower. It's like people were predicting, oh, yeah, this thing will be back down to $5. And it wasn't going lower. And I'm just like, dude, this thing needs to not be taken off the radar right now.
I need one more.
So, I mean, is there anything else like that in the market right now? In the entire market, is there any opportunity like that right now? And I got to say, after everything I've looked at, I haven't seen anything. I haven't seen anything like that. Other than we already talked about Discovery Channel and Viacom. Those look like they're different kind of opportunity because they're so oversold right now. But I think there's opportunity there maybe that's similar to this. But it's not a base, like a super base like this.
All right, so I think it's going to dip tomorrow and then rise up on the up. It will dip tomorrow on the 29th. And then on Tuesday and Wednesday, it will rise up. And it will top out on the 31st.
Okay, for GameStop. Yeah, and they just had earnings. I mean, like it had a nice run up after earnings, kind of, and it was like a 50% move. Don't get me wrong, it's a big move. The options on this thing are so expensive right now that how much are you really going to make from that? You know what I mean? It's like these people who are sitting on the options chain at super high strikes because they're cheap. I just don't see it right now. I don't see them getting paid right now.
All right, here it is.
Yeah, you're right. You're putting the right range on there. Like it's in a range.
So the 31st.
Okay. Of what?
I'm gonna draw a box.
I mean, it might not get there till late April to get to that line you just drew.
Lost, man. Please. No ways.
That.
No.
That's aggressive for it to get there. I mean, it could. It sure could. It could do that tomorrow. But, yeah. There's definitely resistance there.
And now, could it go out a little? Could it go out farther? Yeah, absolutely.
It's okay. I'll pick it up.
Thank you. Let me throw one more time fib on it, just to see what the next one was out. There we go. From there to there.
Yeah, I haven't been following along with the story about that deep fucking value guy. The
Have you?
Roaring Kitty or whatever his name is. I haven't been following along with that lately. Is he still carrying his shares? Do you know?
No, I don't know. No,
yeah, I'll look that up. We'll talk about it on the next show.
I came up with the same thing. This is the beginning,
okay,
which is the 30th, and this is the end, which is the 1st. That's what I see.
Yeah, I mean, that's getting back up there quick, but I mean, you know, it's certainly possible.
I've done it before.
Oh, yeah. Yeah, like, why wouldn't it double again? It has doubled. Why wouldn't it double again?
This is the target.
Yeah. Yeah, you're right. It's looking at it as you've painted it like that, where, I mean, look, that was a major support level when it was above it. And when it's below it, it's a major resistance level. I mean, 300 is the level.
Yeah.
And it might take a while to get back up there. My view is it's going to take longer to get there than where your box appears. But,
right.
I mean, it could hit it where your box is.
About Dollar Tree, couldn't you?
What's that?
I said you could have said the same thing about this one.
Oh, with Dollar Tree? Yeah.
I mean, I don't think anybody expected that to work out, but it's well on its way.
Yeah. Well, you know what though? Like if it breaks above that 119, yeah, it could do it, and it's close. It's attacking that level. It's got some work to do, but
yeah. But yeah, my price target's 125.
Okay.
Right.
Oh, I got another one. Can we do one more?
Yeah.
Costco. Cost. So I don't know that the options on this are super liquid. They do have options, but this one was interesting to me. I was looking at it this weekend. It's like, I can't believe it like went all the way up there and then went all the way down as much as it did. It's a big down move.
I am trepidatiously bullish. I think 357 is where it's trying to get to.
Yeah. So like the time to get in though kind of came and went. Like it was during that sell off.
Unless it fails here. I just noticed this. I'm unsure on this one.
Oh. Yeah, whoa. Now that you put that up there, I can't not see it. But yeah, I didn't see that either. Look at all these touch points. There's one in August. There's another in when it went above it and then came back down in October and again in November. It was flirting with that level, the 350 level, like all of this year too. And now here it is again at 350. Wow.
I don't know.
It's an important level on that. Yeah, good call, man. Good eye.
Hey, wait until you figure out what it's going to do from this point.
All right. What about bring up DISCA? We haven't talked about Discovery yet. I know that we already did look at Viacom. We talked about Discovery, but we didn't look at the chart.
Okay.
So this is one of these sell-off stocks from the hedge fund that got liquidated.
Right.
You looked at it, you said this looks like a margin call when we were talking about Viacom. This is the same thing. It's a part of that.
It went right to resistance.
Yeah. Wow. Look at that. Perfectly.
Usually I don't measure these because they're broken.
Yeah.
But it did try to get to the 78 fib, and then it stopped at the 61.8, the golden number. That's where it closed.
Yeah. So, hey, let me ask you this. If you're going to get calls on this one
nope.
Expiring next Friday, what do you think? For strike?
Expiring next Friday?
Yeah.
Hold on a second. I don't know why the hell I did that. You're gonna like this.
Okay.
I'm looking for puts.
Are you looking for puts?
I am looking for puts. And
Whoa.
I'll tell you why.
Mind blown.
Because it's gonna do this.
Oh, yeah, I got you. Sort of like QuantumScape did like a similar thing, and Nikola did a similar thing like that.
I think it's actually pretty pissed off that it didn't touch the 7/8.
So what I hear you saying is like 50 calls might print next week,
Yeah.
but short dated, and probably if you get a hit, you should flip around and buy the puts with your proceeds.
I don't know about next week. I'd say, well, the puts I would probably do in April OPEX.
Okay. Yeah, so like 3 weeks out.
Because you need a couple of days to figure out what it's going to do from 50.
Yeah.
So it might digest that over Easter.
I mean, that move is just breathtaking. It's incredible.
It is. It is. But that's what I would look for.
Okay.
But definitely short term. You know, if you wanted to buy calls for next week just to, remove some of that theta. I don't know what they're priced at.
Yeah, we can look at like 50 calls for that. You think you could get to 50? Like if you buy the 50 calls, if it gets close to 50, you can punch out.
There's no weeklies.
Oh, shit. Well, you know what does have weeklies is Viacom, I think. And
What about B? DISCB?
Does it? I don't know.
Oh, it has.
I doubt it. Go to Viacom though. It's almost the same chart. Do VIAC. See, almost the same chart.
Yeah, nah. Look, before it was a channel.
Yeah, that one had a clear support level, resistance level, but this one's like it had a preceding uptrend.
Yeah, exactly. Look at this. You got a clear channel here, or Darvis box, and then if you go to Viacom, you do not have that. You have a melt up, and then a takeoff.
Right.
So
let me check and see if Viacom has weeklies. I'm pretty sure it does.
I'm looking for a support resistance. I guess that would be here. So we're going to do, come on, air drawing.
Yeah, they got weeklies on Viacom. Oh, hey, there's a couple more symbols from Speedy Jr. So we'll cut to those after we're done looking at Viacom.
Yeah, I'm bearish this one too.
Okay.
Same deal.
Right, same deal. So up to the 50 level, and then down to around 40. Okay.
Yep.
All right, so hey, here's what Speedy Jr. wants to see. I probably mispronounced that. Sorry. There's two symbols: MOS, which is that used to be Mosaic. I don't know if it is anymore. And the other one is MAXR, MAXR. So let's start with Mosaic.
Okay.
Or never mind. Okay, MAXR. We'll start with MAXR. No,
I wanted to see what it was.
See Mosaic? All right, here we go. Strong uptrend. It's pulled back. You've already been looking at this. You already have levels painted on this.
I do?
Yeah. Right? That's your channel lines, right?
Oh, yeah, I'm sorry. Yeah, I got what do you call that? Bullhorn.
Yeah,
megaphone.
I don't remember if that was on the show we were looking at this or not, but
I don't know. I do remember us. Maybe it was us talking about it. I don't remember.
So, I mean, it's definitely at a support level right now. Because if you expand out the bottom end of that channel, it's like, it's almost breaching it.
Let's add it.
Yeah. Right.
All right, so then the next one, we already have that one drawn, so we'll go from here. I know that's going to fall in line for the most part, but this one will not. Come on, get up there. All
Yeah,
right.
the Mosaic Company. I'm looking this up. Is this the fertilizer thing? Basic materials, agriculture inputs? Yeah, I think so. Yeah, so okay, so this is a potash company. So it's sort of like it used to be called POT, P-O-T, the potash, and they renamed it. So the idea here with this is essentially a fertilizer, and I mean these stocks can really, really run. So the time frame you're on here, this is showing back a couple of years.
I'm just looking at the weekly chart at the candles.
Yeah, yeah, all good. I mean, my gut instinct is that it just hit support, but
29.37, and then uh
I think it's going to take some time before it hits a new high, though.
yeah.
After a shakeout like that, I mean that's a shakeout. It just had a shakeout.
Yeah. This one, he likes the hard ones.
Yeah.
This is that's what I'm seeing.
All right. So wait, talk us through it though. So okay,
All
so
right.
you see a support level there at 28 ish.
I want to see it pop to 31,
Yeah.
and then I want to see it come back down and visit 28-ish.
Right. As part of a base building, it looks like. It looks like it wants to build a base.
That's presuming that it doesn't completely fail and get down here in this time frame.
That would be ugly. But yeah, I mean there is a major support level there.
If it fails here, drawing, that's what I want. If it fails there, it's going to here, but I don't think it's going to get here in this time frame. I think it's going to get here in this time frame.
Yep, that looks right to me.
If
And
it doesn't,
again, that would be part of base building. This looks like a stock that wants to build a base.
if it doesn't, I'd like to see that.
A retest of the old highs.
Yeah.
Yeah.
So you got some different targets here, bud.
So let's talk about the theme for this. And can you flip back out to the weekly in a minute? Like
I want to clean this up.
Yeah. I'm not trying to rush you.
I can talk them through it.
So some of the theme here with this is the ag prices, going up a lot.
They are.
Yeah, we were looking at this a couple of weeks back, like corn and some of the other commodities, soybeans. They're all like breaking out to new highs, and I think this is a play off of that. So I don't know what the time frame is on this trade, but it's
Yeah. Oh damn it, Liam! Come on, man.
Is he playing his video games?
Yeah.
Yeah, my kids sound just like that too. Yeah, so it's actually following. Okay, so that's Mosaic. I thought you flipped over to corn for a second.
I did. So, as you saw, we had a level here that is a quasi support resistance. If I draw it straight across, you could see it right there. And then, of course, this is new highs based on the fear of food shortages because of the pandemic.
Yeah.
And this is a retest of, or a test of this level once was resistance has now become a support.
Yeah. He
So
says,
that
I'm looking for 50 by September, but last week shook my confidence. Yeah, it's a lot of things that were commodity and oil dependent. They got hammered. And so I don't know if this has anything to do with that boat that's stuck, right? But it is in a similar trading pattern to a lot of things that have been hit by that stuck boat.
I guess it's a possibility. There's definitely a resistance line there. I mean, if he keeps going strong, yes, I can see
Yeah.
that. But my problem is that it would have to work off its overbought condition on the weekly chart. And
Right. So
where
the way it
work
gets
that
there
off
is
at.
not going straight there. It's by consolidating first as a base and then breaking out and running up to that level.
Right. So, that's
So
all well and
I don't know
good.
if you
And I
have
think
like out of the money calls, but one thing you can do instead of like adding more contracts or whatever is like you can roll down and strike if this thing drops lower. So say it drops to that lower target that Chris has drawn like at around 25. If it drops there and you've got, let's say you've got like 40 strike or 50 strike for September. If you have that, you could take the opportunity to roll lower in strike. And what that'll do is you'll be taking less time decay on the way. And yeah, you'll have to put up a little bit more as a debit in order to do that roll. But then if it bounces, if it gets that bounce, you don't have anywhere near as far to go in order to get in the money. So if you want to see a video about rolling, I got one in the description where I talk about this kind of stuff. But yeah, if you get too far out of the money on a dip and it drops to that lower target, that's something I would consider doing with out of the money contracts. So
I think what your desire is, or what you'd like to see, is doable. A lot of it, like John was saying about the ad prices, is going to make a big difference.
yeah, and because it looks like it wants to build a base, you may have to buy more time as well. So I guess what I'm saying is like roll down if you get the chance, like on a drop in the price of the stock, and then you may have to roll out in order to, out to 2022 in order to get to whatever your strike is. I mean, you'll know once the base forms. But the point is, like, if it does form that base, there are actions you can take to improve your chances.
If you're looking at it fundamentally, I like your number in that time frame. And by fundamentally, I mean food shortage, just issues with secondary to the pandemic.
Yeah. All right, so the next one is MAXR, M-A-X-R. I should probably let you go soon. I haven't even eaten dinner yet. I'm going to have to go make a quick dinner.
Bye.
It's getting close to 10 o'clock your time, looks like.
Buy it.
All right, so you're long on MAXR.
Yeah, buy it to the gap.
Aha. So, by the way, I don't have a position in MAXR. I don't have this one. I don't even know what it is. Let me look it up. I should know what it is, but I don't.
That's a nice chart. That's a nice bullish chart to me.
Yeah.
But now here's the problem. You're going to get this. I don't know how long it's going to last, but you're going to get a constructed bottom somewhere in here. It only stands to reason that that's going to happen.
Communication equipment. Oh, okay. Earth Intelligence and Space Infrastructure Solutions in the U.S. and other countries internationally. Interesting. I didn't know about this company. I'll do a little homework on it. 4,300 employees. Let's go to some stats here.
Are you wanting a longer time frame? Is he wanting a longer time frame?
Yeah, let me check. He's looking for an entry on MaxR.
Good. I'm glad he said that because short-term bullish, long-term bearish.
Okay. All right, so you're looking at, hang on, you're looking at a weekly chart right now, right?
I am.
Okay. And so this looks like a dip buy, and it looks like a dip buy at the support level. There's a clear support level around 30, right?
Okay. I'm sorry, what?
It looks like there's two support levels. There's one at like 30 and there's one at 35.
Well, that one's screaming at me right here.
The 20? Yeah.
And yeah,
I mean,
there's
if it
another
gets
one.
to that, it would take a while. Yeah, it's okay. So that's the 30 level I was talking about.
Because, I mean, look at this over here. And look at this. And look at this.
Yeah.
Those are like 2-week moves. Well, not this one. But this one happened in 2 weeks. This one happened in 2 weeks.
Let me check the RSI on this real quick. Hang on, Chris. I'm going to flip away from your screen for just a second. MaxR. Because, like, if it gets there in a hurry to these levels that Chris is talking about, like, it already kind of wicked down to the 35 level.
Yeah, I see that.
The weekly RSI is 50. The daily RSI is 41. I mean, if you're waiting to enter, like, it just hit when it did that wick on the weekly chart. It just hit the 30 RSI. So it may be exhausted to the downside for now.
Yeah, like I said, it's a short-term buy.
Yeah.
But if you're looking for a buy and hold scenario, go lower.
Yeah. Right. So it depends on your time frame. If your time frame is short, he says defense contractor, not sure about time frame either. Okay.
Well, I would buy it to, what did I say? 40, did I say 40 something? 42, 44. I got to go back to the daily chart.
Yeah.
Are you buying shares or options?
Good question. I don't know. He hasn't said. It'll take a minute for the chat to catch up.
Okay.
Yeah. So, by the way, on the stream, I put like that we need it to be high quality so that people can actually read these charts, and so there's a little bit of a lag for everyone. Like Chris and I are talking in real time, but the stream's a little bit lagged.
Yeah.
And what's the volume looking like on this MaxR? It does millions of shares per day. That's pretty liquid. I'm surprised I haven't heard of this one. So here's something else I see looking at this. Is I see like Chris says, short-term bullish. Like, see this 50-day moving average that's now kind of rolling over? Sort of like how we were talking about, I think it was Tesla earlier. Like, it looks like it wants to come up and hit that 50-day. This one also looks like it wants to come up and hit this 50-day moving average.
Hey, you ready for nighttime?
Maybe it wasn't Tesla we were talking about that on, but I mean, that's what this chart looks like to me. And if it were to form a base, I'll just say this. If it came back up and hit this around, let's say 40, mid-40s, that base is going to look weird because of these like rolling lower highs. I mean, it's just, you rarely see bases like that. This chart trades wide. Let me zoom out. Yeah, and the other thing is, if it is forming a base, it's not an early stage base, but I wouldn't say it's a late stage base either. So, these bars are really wide.
Meat is a very nice sheep. Daddy piece of they killed him.
Yeah, so what you could do if you want to get into this is I would wait for another one of these kind of like oversold on the daily RSI moments and seize on that. And if you don't want to wait that long, something you could do, I'm going to zoom in and look at like the 1 hour here. And you'll see like it has these oversold moments on the RSI on the 1 hour chart pretty regularly. And so these tend to come in pairs. They don't always, but if you look, like see how there's like a sequence of a few of them. So in other words, like let the first signal tell you to get interested, and then let the second signal tell you to take a position. And so if you did that here, let the first signal tell you to get interested, and then you let the second signal tell you to take a position. It can tend to work out well that way. So if you don't want to be patient and wait for an oversold condition on the daily, you can flip out to the hourly and look at it like that. And if you get into what you could do is, like Chris said, fairly short-term bullish. Is you could have some kind of short-dated call options maybe that you buy, looking to tag some of these trend lines that or these moving averages that it's underneath right now. So if it dips again in a way which we just described, maybe look for it to tag some of these moving averages up here in the short term. And that could be a way to kind of like slowly leg into this. Because you could take any profits from trades like that and roll it into a longer term position. So that's my take on it. So yeah, I like the ATR. Yeah, the ATR is big. You're right. It's like 7 points right now, and on the weekly, the ATR 7 points. And look at it climb. I mean, it's like really climbing. So I mean, these are big bars. A lot of opportunity in this chart.
Yeah, that ATR trail stop is sitting right at the 42.5.
Oh, that's cool that you can show that on the chart like that. Yeah, and that's that 42.5 level. There's moving averages right around there too. Like the yeah, the 50-day moving average is 46, but by the time that it gets up to that level, it's going to be much lower. So it'll be around, it'll be around where you were just showing on that ATR. Or, I'm sorry, that trailing stop.
So I expect it to go up to the 42.5.
Get out of here. Slimy, stupid.
Hey.
Okay, I'm sorry.
I'm gonna knock you in the head with a bat.
Oh yeah, I will.
Yeah, I got two little boys. They're not here tonight. They're here with their mom, but it reminds me of my little boys.
If I could get the 45 for 89.95 90 cents. 85. If I could get that for 85 cents, I'd buy it.
I do not love you.
He ain't talking to me, bro.
Oh, okay.
No, I know.
So what expiration? I'm going to bring up the chart for that contract too.
He never said that to me in his entire life.
All right, so you're looking at the April 16th, what strike? 45 strike.
Yeah.
Okay, max R, April 16th, 45 strike. Yeah, I want to show the chart because I'm trying to help everyone build their muscle memory for when it comes to what these contracts can do, including myself. April 16th, 45 strike. Let's look at the chart for this.
Chart of the call, the 45 strike.
Yeah, so it's beaten down right now. That's what I'm saying. Like, if you get this on sale, like if it gets hammered next week.
Man. Hey, Speed Guy. I'm sorry, I don't know your name, but
Speedy Jr.
Yeah, if you look here at this gap on the daily, and you look at the ATR trail stop, it's all lining up at the $3 strike. So if you can get into this for 87 cents or 80 some odd cents tomorrow on a pullback, so you're getting a 25% off sale on your options for the April OPEX with a high probability setup of $3 per share. That's
You mean per contract? You're looking at, you got a target of like $3.
Yeah, it's $3 per share, 300 per contract. You're looking at a really good setup there. Actually, that's a good find. I might take this trade.
Yeah, if it goes on sale early next week, it could be good. I got the chart of it up too, by the way. Chris, I don't know if you could see that, but I got, well, I mean, yeah, you got it up too.
The options chart?
Yeah. Is it the same one? Yeah, $1.13. Yeah, I'm looking at the same thing. It's cool that you put that overlay on there, the trail stop.
Well, you guys said ATR, so I figured, well, let me throw up the trail stop and let me see where it's at.
Yeah. And the other thing that does is, like, say it just keeps on going down. Well, that's going to keep you out of it if it just keeps going down.
Right. But isn't his direction bearish?
No, he's looking to buy it. He's looking to buy in.
Oh, that's right.
Yeah. And so, I mean, and that's what you're looking at with the calls, the 45 call, but
I hate this theoretical price thing. Aggravates the piss out of me. So yeah, I'm liking it. I'm really liking it here. And let's say that it just keeps on trending like it is. You're looking at what date is that? The 29th, tomorrow? That's impossible. It's going to pull back tomorrow. It should.
Well, you got what, 2 or 3 weeks? Is it 3? Yeah, it's 3 weeks, right?
Plenty of time to get up there.
You got 3 weeks till the monthly expiration.
Well, anyway, that's my story, and I'm sticking to it.
All right. Yeah, interesting. Well, Chris, I better let you go. I gotta make dinner, and
Okay.
yeah, it's been a fun show. So hey, everybody, follow Chris on Twitter. You can find his description or find his Twitter in the description. My Twitter's on there too. Hit the like button on the video, please, and also share the video. I put the replays of this on Twitter, so if you can help share, it's a new channel. It helps us out a lot. And anyway, good luck next week, everybody.
Yeah. Good.
Chris, good catching up with you again. Thanks for coming on. Oh, he already dropped. Okay.